What's up, guys? We're back with day 5 of the boot camp. The point of this video is most traders struggle with getting in and getting out of trades, or they risk too much and blow up their account. I've been there. I know how it feels. I know the mistakes people make, and I know the right way to do it. So today I'm going to show everybody the risk system that helped me turn small wins, $100 wins, $200 wins, $300 wins, to then $500 wins, $1,000 wins, and now $5,000 wins, $10,000 wins. How exactly I position sized, I scaled, I sized in, I knew when to get in, when to get out, and everything. So with that being said, let's get straight into it. First thing, guys, is with my strategy, the entry is the most important part of your trade, because a bad entry just means that you have a more risk. So bad entry equals more risk. More risk equals lower risk to reward. Lower risk to reward equals bad edge. Bad edge equals lose money. Okay? So that's why an entry, a good entry, is very important, because if you got a bad entry, you enter too high, then your stop loss gets bigger, your risk gets bigger, you have a bad edge, and that is how you lose lots of money and blow your account. So guys, your entry is basically going to allow you to have less risk and more reward, which is really, really important. Entry is all about having patience and waiting for the retest. The retest is the magic word today. Retest. Retest is our entries. I only enter on retest. And guys, again, ignore my voice, ignore how I'm sounding. I'm giving you guys the sauce, but I'm just really, really sick. So how do you know when to enter? First things first, you need to mark your pre-market highs and your pre-market low in the stock you're watching. So as you can see here, we have our pre-market high marked, and we have our pre-market low marked right here and right here. Okay. Next, you want to wait for a 5-minute close over pre-market high or under pre-market low. Once you get that, you want to enter in the retest. So as you can see right here, we have the 5-minute close over pre-market high, and right here we had another 5-minute close over pre-market high. Right here we had a 5-minute close over pre-market high. Right here, 5-minute close over pre-market high. Entry is everything again, which is why the retest is super, super important. So after you get that 5-minute close over pre-market high, you want it to come back down and tap the pre-market high as close as you possibly can to it, since that's what's going to lower your risk. A retest is simple. It's basically a support and resistance flip. So when the previous resistance becomes support, you want to enter that support. So before I show you guys in the actual chart, let me just give you guys a quick example. Say this is my pre-market high. Say we get a 5-minute close over pre-market high, right? So we get a 5-minute close over pre-market high. The retest is this right here, and you want to enter exactly when it taps it. So the retest is just the stock coming back down and tapping this level, because this pre-market high was a previous resistance that's now going to become a previous support, if that makes sense. That's the support and resistance flip. So as we can see right here, this is the retest. Let me make this white. This is the retest right here. Right here, this is the retest. Right here, this is the retest. Right here, this is the retest. The retest is where you enter. And again, you want to enter as close to the pre-market high as you possibly can. On the retest candle, you do not need to wait for a 5-minute close. You just need to wait for a 5-minute close on the previous candle before it, so that this is your confirmation. We get the 5-minute close over pre-market high. But for when you're actually entering, you want to get it as close to the pre-market high as you possibly can. So right here. Your risk is simple. If you get a 5-minute close under the retest spot, then you get out. This places your risk to reward in such a good spot, because think about it. If we're buying it extremely close to the pre-market high and we're getting out if it gets a 5-minute close under it, we're risking a couple cents to make a lot more than that. This allows you to have small losses and big wins. A little more in the retest though. So as we can see, this is the previous resistance. We get the close over it right here, and we get the retest right here. This picture is a great picture. Same thing right here. Key level, we get the break, we get the small little consolidation, and we get the retest and the move up. So let's go over a position that would have lost. So we get a 5-minute close over pre-market high right here. 5-minute close over pre-market high. Then, unfortunately, you have this big 5-minute candle close under. You would have gone out here. Our target on this was 229.50. Our risk is under the 5-minute candle. And usually the candles aren't this big. So this was a pretty big one. Right here, you risked about, let's think about it. You risked from 228 down to 227.30. You risked 0.70 cents to make, let's see, 228 to 229.50 to make about $1.50. That's a 1 to 2 risk reward. That's like the lowest that goes, 1 to 2, which is still great. With the 1 to 2 risk reward, you can win 33% of your trades and still be profitable. So I'm going to give a little brief on exits, but Ellie's going to go really more into detail. So just simple for exits. If I enter, here's the pre-market high, 5-minute close over, retest. If I'm entering in the pre-market high retest, I'm trying to get some exits at new high days. So as you can see, previous high day, then here we break high day. I'm going to exit a new high day. He's going to go over how you hold your runners. Okay. So here, for another example, I enter on the retest. I trim some at low a day. I got stopped in the rest in the 5-minute close over pre-market low. Since we got a 5-minute close, I had to get out the rest, but I still got a trim. That trim helped me a lot. So guys, let me go over something. So as you guys know, I went over the risk reward and how we're buying it very close to our stop loss. So like if this candle right here goes up, great, we have a big win, right? Big win. We'll take some trims at new high day. We'll scale the runners out. Ellie's gonna go over that. But if this candle went like this and close under it, then what do? We cut it fast. We're risking a little to win a lot. I only take a trade if it's at least a 1 to 2 risk to reward. Usually I get anywhere from around 1 to 3. And I have a pretty high win rate, but that's because I go for quality over quantity, which is very, very, very important. So let me ask you guys something in your head right now. If you were to flip a penny 10 times, if you're flipping a coin 10 times, and every time it lands heads, you win $200, and every time it lands tails, you lose $100. Anybody would take that bet, right? You have 50-50 chance, and it's 50-50, but every time it lands heads, you win 200 compared to only losing 100. I'll take that bet every time, right? That's exactly what we're doing with trading. Say you have a 50% win rate, which is kind of low. With a 50% win rate, and a 1 to 2 risk to reward, let's see. So you would make $500. You'd make $500. So you lose 500, but then you'd win 1,000. So what does that come out to? Plus $500. You could easily do this, putting 1K into each trade, max stop 10%, win 20%. This is super low too. When you scale runner, which Ellie's gonna teach you in a bit, and like literally when I'm done talking, you can get 40, 50, even 100% wins, which in that one trade you'll make $1,000. But boom, with $1,000, you just made $500. And now, instead of putting 1,000, you could put maybe 1,500, right? Which obviously you never put your whole account size, whereas we're assuming $1,000 your position size. Now it goes from $300 wins, and you just keep growing and growing and growing. Before you know it, with the 1 to 2 risk to reward, this 200 is gonna turn into 2,000. 2,000. The losses will get bigger too, but as long as you have that proper risk to reward, not only can this turn to 2,000, but it can even turn to every time you win, you make 3,000. Every time you lose 1,000. This is how, when you're raising your risk to reward to scaling with runners. So that's why risk to reward is so important. And it might not always be exactly 2,000. Maybe it's 2,500 sometimes. But 1 to 2 is the lowest you want to ever go. So for those of you who are confused, again, 1 to 2 risk to reward is simple. It means you're risking, say you're risking $10 to win, to make $20. Oh shoot, to win $20. Okay, that's just with literally $10, $20. It can go to $1,000. It can even go to $10,000 to make $20,000. All based on how you scale and how you size. But that's a brief overview on how I know when to enter off the retest, off the pre-market high retest, pre-market low retest. When do I stop out? and why risk to reward is so important. Because I'm sure that every single one of you guys would take this bet, right? Because at that point, it's not gambling. It's just a no-brainer, which is how you need to treat trading. Treat it as a business. Create your own odds. That's what I do. Ali, it's all you.
Alrighty, let's get into it. So we briefly talked about entries and exits, but I want to add a little bit more to it. And I think this will be great, especially if you have a small account. So let me share my screen. Okay, so I always ask this question to traders. So if you are entering a trade, what's your risk? I always start with that, because you want to have a risk mindset first, meaning every trade you take, you want to assume you're going to lose money. Don't think about how much money you're going to make. What's the exit plan, right? You always want to map that out in your trading plan. And as previously mentioned, every time you enter a trade, you think, what is my risk? Okay, this is a risk-based business. If you do not know what your risk is, you do not enter a trade. In simpler terms is, where am I going to stop out? What's my stop loss? If you ask me, hey, what do we think about this trade? Should I enter here? I'm going to ask you first, what's your stop loss? Never ever start by entering a trade of thinking of how much money you will make. Okay, this is a money-based mindset versus a risk-based mindset. This is wrong. 90% of traders think, how much money am I going to make? I want to make, 100K a month, right? I want to do all that, but how much do you need to risk to get there? Okay, it's just like business. In business, you put capital into your business in order to grow it to make more money. Okay, it's just like that in trading. Trading is a business. So I want to briefly cover two types of exits. Okay, so the first one is EMAs, and the second one is levels. So let's look at some bullish examples of levels versus EMA exits. So we talked about the retest. So you would, enter the trade on the retest here. This is your pre-market high. So your entry would be right here. And what happens? The next candle opens up and breaks below the pre-market high. So you would exit right there. It's really that simple. And a lot of traders will ask me, is it a 5-minute close? Is it a 1-minute close? If the candle looks like this and it's breaking below on a 5-minute chart, you want to be cutting it. It's really that simple. Sometimes you're going to have to grit your teeth because it'll look like this for 1 minute and then flip back green. So just wait for that 5-minute close. Next is an EMA retest. So this red line here is going to be the 9 EMA. So the price is going up and up and up and up. Okay, and you enter off the 9 EMA test and the next candle opens below it. Okay, you're going to cut it. It's very straightforward. A lot of traders overcomplicate this and read too deeply into it. And I want you to remember from this bootcamp is keep trading as simple as possible, follow the rules, and don't get distracted by the noise. So this is a bullish example. Let's talk about a bearish example when it comes to exit plans. Okay, so again, EMA, price is coming down. You come up, it taps the EMA here. Here's your entry, and the next candle breaks above. So you're going to cut the trade. Okay, you were wrong on your trade, you're going to cut it. 5-minute close over, you cut. Okay, same example when it comes to a pre-market low retest or a previous day low, whatever level you want to use. I just want to keep things consistent. Price comes down, comes up, taps the level you enter here, and the next candle breaks above, you're going to cut it. Why do we cut it there? Because on candles like these, like say, this candle is a little bit aggressive for visual sakes, but say that the candle like stopped here. You only lose like 10, 20%. Same with over here. You lose 10 to 20%. Over here, 10, 20%. Okay, over here, 10, 20%. Notice how this is relatively small compared to our reward. This is key as we move forward. So people always ask me, where do I sell? Where do I sell? They ask PB where he's selling. They ask me where I'm selling. They ask people on Twitter where they're selling. People don't know where to sell. And I'm going to fix that very simply. The golden rule, I even wrote it in gold, is you always sell high a day or low a day if it's a bearish setup and leave a runner. This is key right here. Okay, is leaving the runner. Okay, so make sure you're paying attention as we move forward. So let's look at some examples. So we have, this is going to be a level, LVL for level, and this is going to be an EMA, just to keep things consistent throughout. So you enter right here off the pre-market high retest, you take some more contracts there, you are going to sell some, not all, at high day. Why? Why would you do that? The reason you sell high a day is because say it rejects high a day, right? Say it prints an ugly candle that looks like this, you already locked some gains in. And then you just stop out the rest of your contracts at break even, or BE as we put it in trading terms. We'd call it break even. That's all you would do. Why? Because this protects it. If your entry is down here and you stop out on your rest up here, congratulations, the entire trade is green and you don't have any drawdown. So you always want to have your finger on the trigger ready to sell at high a day. Now, for EMA, same sort of method. We're going to sell high a day. Okay, so this is high day right here, just the high of the day. Okay, because if it rejects and comes back down, I know it's kind of an awkward looking candle, our entries are down here. Okay, so if we stop out up here, no matter what, this trade is green. No matter what. Okay, same with this trade. No matter what, our entries are down here. We stop loss a little bit above it. The trade is green. Okay, but now, what if the trade keeps going? Okay, so say for here, you're going to say, yo, Ellie, you told me that I should sell low a day. What about the other contracts? What about them? Well, here's the thing. You leave a runner until the EMA breaks. That is why we have an EMA on our screen, okay? Because the EMA just keeps hugging it, goes all the way down. Your first trims up here are going to be, say we sell low a day, right? So you're going to get your 20%, okay? I'm going to make this a little bigger so it's easier to see. Right? But what about if you were to sell down here, your runner? What percent would these runners be? These runners would be like 200%. Now, I wasn't very good at math in high school and middle school, but I do know that 200%, okay, is a lot bigger than 20%. And all you do is hold a runner until the EMA breaks. Okay, but first, before we discuss that, I want to talk about the math behind runners and also sizing. Sizing is super, super, super important, especially if you have a small account. So let's talk about sizing. So I have 3 examples here. I have a 1K, a 5K, and a $100,000 account. Oh, there's a typo in here. So it looks nice and pretty. There you go. And a $100,000 account. Now, I would assume you probably don't have a $100,000 account, but I want to show you something really cool. So a $1,000 account, your position size is going to be about $300. Notice how your position size isn't $1,000. Okay? You don't full port here. Okay? We don't full port. Your risk is going to be $100. Okay? Or about 20 to 25% on your contracts. Remember what we talked about before. If you were to break down or the trade wasn't going to work, you would lose 10 to 20%. Okay, that will be your risk. Okay, and your reward is you want to make a minimum of $200. As PB previously mentioned, right, that's about a 2 to 1. Now, on a $5,000 account, you can have a little bit more flexibility. Small accounts, you don't have flexibility. The larger account is the more flexibility you have. Unfortunately, that's just the nature of the business and of trading. But this will prevent you from blowing your account. But now let's talk about a $5,000 account. If you are new, okay, and you're just placing your first options trade, you're going to use a $1,000 position size, a $200 risk, okay, and your reward is going to be $400. Okay, so what does that break down in terms of numbers? So your risk is going to be 20% and your reward is going to be 40%. Okay, so quick math tells me that is about a 2 to 1. Now, if you're more a seasoned vet and you have a little bit more comfortability trading and you know your setups and things like that, like you can use $2,000 and you just use the 400 and 800, especially on like a trend day or things like that. You can definitely feel free to size up. That's only if you're experienced. And when I mean experience, I mean minimum of 2 years in the market. Okay, but for anyone starting out, $1,000 is best. Why? Because this will allow you, so say you have a $1,000 position size. Okay, this will allow you 5 trades, okay, per day on your account. Okay, 5 trades. That's a lot of trades. Most traders take less than 3. So you have plenty of wiggle room. And when we get into more advanced strategies and things like that, we'll discuss later. You can really take this 5 trades and stretch it and, turn this 5K account into a 10K account. So general rule of thumb is, 25% of account per trade with a risk reward of 2 to 1. Now you're probably asking, Ellie, this is a boot camp. Like, why are we talking about a $100,000 account here? Like, that's just kind of ridiculous and not the right audience. Well, here's the thing. My goal is, and PB's goal is for you eventually to have a $100,000 account. And I want to propose a question to you. How many times have you seen on Twitter, we'll see someone have like, just go something crazy, like $50,000 in a trade, and you're thinking to yourself, like, holy shit, like that's a lot, right? But if he's buying shares with this, right, or even options, do you really think he's going to let this $50,000 go to zero? Unless it's Wall Street bets, probably not. And I just want to show you this with shares just because it's easier to kind of demonstrate. It's like, say a trader takes $25,000 worth of a stock, okay? A new trader might think, oh my, like he's risking $25,000. Like that's a lot. Like that's a Honda Civic or a new Toyota Camry. But what if I told you they're just risking $1,000 and the reward is just $2,000? They're not expecting this whole entire position size to go to zero, okay? Because they have a stop loss. Now, if they were gambling and things like that, sure. But I just want to show, because I always think it's interesting, right? When I first started trading, like I would see someone have like $100,000 in a trade and I'd be like, oh my Lord, like that's insane. But a stop loss, if it was 10%, you know, it would only be like 10K. And then I'm like, oh, okay, it's really not as scary as I thought. But it goes back to what we said previously, where this is a risk-based business. If you didn't have a risk-first mindset, okay, this 100K can easily turn into zero without any proper risk management, strategy, nothing. Okay, let's talk about my favorite thing in the world, and which PB hinted at, is the math behind runners. The math behind runners. So what is a runner? Okay, I think there's a rap song where it says she's like a runner, she's a track star, right? I don't know the name of the song, but you get the idea. So what is a runner? So a runner is, we call these like your lottos, okay? Or your flex, right? If you're a social media person and you want to show your friends, like, yo, look at this trade, I made, 500%. Like, no one in their right mind is actually holding the entire position for 500%, okay? They're flexing and they're leaving a runner. So let's do some math. So let's say we took 3 contracts at $1, okay? So that means our position size is going to be about $300, okay? And think about this. This ties in directly to the small account. So this is what you would do if you have a $1,000 account, okay? And now, I'm just going to draw it real simply. Let me make this bigger so you guys can see. So here's the stock chart, okay? We break out, we come back down to our key level retest. So we'll just write PMH for pre-market high. And then the stock decides to rip, and we sell our first contracts at high a day, okay? Our first contract. So let's say we sell two contracts and we sold them at, I don't know, $1.40. Okay, we sold them at $1.40, or around 40%. How much money did we make off of this trade? Okay, for these 2 contracts, we made about $80. Okay, that's pretty good. But you're probably asking, well, Ellie, we had 3 contracts and we always sold 2 contracts. What about the last one? See, so that is where the runner comes into play. So what you're going to do is, as the stock keeps ripping, okay, you are going to hold a runner, and your stop loss is going to be the 9 EMA, okay, or the 8 EMA, whatever one you want to use. Doesn't matter. The concept is still the same. And if you remember, up here, we talked about what is the exit plan. Okay, so here's an EMA exit plan. So if you're following these rules, you know that you're going to exit when the 9 EMA breaks. I hope you're seeing how this all ties in together. Okay, so your exit plan is going to be that. So once it breaks the 9 EMA, you're going to sell. So let's just go back up to here, just because this one's a lot cleaner, okay, and say that we sold our 2 contracts right here because this was the high a day and it kept ripping. So remember, we sold our contracts for 40%. What do you think our contracts are going to be once we break the 8 EMA or 9 EMA over here? They're probably going to be like 200%, right? Just say it's a Lotto Friday. Okay, so say they're 200%. Let's talk about the math behind that. So let's go back down, and let's say our last contract we sold for 200%. So that would be, what's 200%? Like $3? Oh man, I can't do mental math in my head. Let's just do 100%. Okay. So the contract went 100%, so it'd be at $2. Okay, so 100%, and we netted $100. But I want you to notice something here. Okay, I want you to notice something. For one contract that we have, we made more money than the 2 contracts we sold earlier. You see that? The 2 contracts we sold earlier. Now, okay, so we lock in $80 of gains on this trade. Okay, how much did we pay for this last contract? $100. but we already locked in $80 worth of gains. So now our basis is actually 20 bucks. See how it works? So now we can let this runner go as crazy as we want because we already paid for $80 worth of that contract. Okay? So you can let that thing go crazy. I hope you all understand that because this is extremely important. Now, let's go into practice on how this actually works. So here's actually a recent trade that we took. Okay? So let's talk about it. So we can see this is the pre-market high here. All right? So this is a bull flag. Okay? On the pre-market high, the retest. My line's off because I have shaky hands. It is what it is. So what do? We sold the high day. So let's say we sold our 2 contracts, okay? But then we have 1 runner, okay? So here's a screenshot here. Notice how I went 100%. So we sold high a day, but then we left it until the 8 EMA or 9 EMA breaks, which it did right here. So now, if we look at our example up here, just leaving it against the 8 and 9 EMA, we made 100%. So every 1 contract you bought, you doubled your money. And Tesla is quite expensive. I believe these contracts are about $3. So these contracts now went to $6, okay, for $300 in profit off of 1 contract, okay? Now, let's say that you missed this first move here, okay? You missed it, all right? Well, let's look at it. Tesla then formed another flag right here. Let me zoom in so you can see another flag right here. So you would enter off this bull flag. Okay, you would sell the high a day, okay? Sell your high a day, get your 20%, right? Get your basis down. Make those contracts on the house money, right? On the casino, aka the market makers. And look what happened. Your contracts went, did it break the 80 May here? No. And then eventually it did break right here. So contracts from here to here on a Friday went 400%. Minimum. Okay, now you have a small account. That is how you grow it. So people always say, like, I keep missing the move. I keep missing it over and over and over again. Like they're so happy to see, they think of the model, right? It's like see green, take green, but there's a way to do see green, take green appropriately. Okay, so lock in at the high day always, but if it really starts moving and shaking, just keep some. Let it work. Okay, just trust the 80 EMA. As long as it holds, you're going to hold. As long as the trend holds, you hold. It's really that simple. Traders often, they're looking at the candles. Well, it's this type of candle type. It's like you're looking into it way too deep. Keep it really high level and really simple, and you will make much larger gains. So finally, to wrap everything up, is the goal is to always get the runners risk free, the house money. Think about when you go to the casino, okay, or anywhere, and say someone, you go to a casino and you make $1,000, okay? You make $1,000 at the casino off 1 hand of blackjack, okay? This is all casino money. So you can let casino money do whatever it want because it's not money that's actually in your bank account. It's a couple poker chips in your pocket. It's the same thing when it comes to options trading. It's poker chips in your pocket. It's not real money until you press sell and you eventually leave the casino or get off your phone or off your computer or whatever. That is the key. It's house money. Let it work. Because when you get trades like this, which recently have been happening quite often, you're making 400 or 500% off 1 contract. I mean, that's $1,000 on a small account. So now your 1K account becomes 2K account. And when you think about house money, let's think about this example up here. So here's your 2 contracts. You lock in your $80, okay? And now your last contract, your basis is now only $20, right? And then that is how you go. So thank you for having me as always, and I hope this helps you, and cheers. See you guys on the other side of the profitable trader journey.
That's fire. Well, guys, Ellie just gave you literally everything on scaling and exiting, position sizing, in general, entries and exits as well. I want to go over one thing really quick. I want to go over 2 trades. So here we see this in the video. I just want to go over some examples. Pre-market high retest. Be pre-market high, retest number 1, retest number 2. Both A+ retest, and the first one is better. So the first retest is usually gonna be better than the second one, guys, because the second one you already rejected some type of area, especially when you rejected high a day 3 times. But this is another example of potential entries. Also, when it gets close to VWAP, it's good. So here we have 2 retests. First one worked, second one also works. Tesla, I lost in this trade on yesterday. So we have, check this out, pre-market high. We have retest number 1. This one would have worked, right? Then we have retest number 2. I took this one and I lost. I had to get out on this 5-minute close under the retest. Look what happens. You come back up, you reclaim it. You have this 3-bar play on VWAP, consolidation, and then a rip. It's unfortunate, but it happens, guys. There's going to be times where it loses, and you just need to know when to get out. So I literally entered it, and I got right out on this 5-minute close under. Small loss, but that's okay. Small losses and big wins, that is how you'll be profitable in the long run with this strategy. With that being said, guys, I hope you guys enjoyed this video. If you did, make sure you join the free Discord. It's 100% free. We trade live every single Friday. I do free classes in there every single Sunday. We'll also be dropping free content in the free Discord as well. So join up. The link is below, 100% free. Follow Ellie at LED Trades. This bootcamp is getting better and better. Tomorrow's trading psychology is going to be very, very deep.